Well, staying with bank earnings, Standard Chartered has announced a $1 billion share buyback as it reported second quarter earnings that also beat expectations. The London-based lender posted a pre-tax profit of $2.33 billion for the 3 months through June, exceeding a Bloomberg compiled estimate of $2.08 billion. I'm pleased to say the Standard Chartered CEO Bill Winters joins me now. Bill, really great to have you back. A record first half. You must be smiling as well. But we've seen beats for Deutsche there. We've seen for UBS as well, and on Wall Street. The bar is high. What's your message to shareholders mid-year?
Look, we're obviously very happy with the first half earnings, the second quarter earnings. The environment is good, as you just noted. Other banks are also having a good run. I guess what we'll be looking at is how sustainable is this good run. We feel very, very good about the momentum that we've got. The second quarter for us was everything from our wealth business to our banking business to the day-to-day activity in our financial markets business is growing at double-digit or stronger rates. So that we think bodes very well for the future, which may be a continuation of this trend for some time. The underlying support pillars are really quite strong. If there's some sort of a correction or an adjustment to the economy or something like that, I think we've also demonstrated that we're extremely resilient. So we have no observable credit losses. We've been quite cautious in terms of taking some precautionary provisions, but really very small in the overall scheme of things, and no underlying credit problems. So the combination of like good downside protection and very strong upside momentum, we think puts us in a good place.
So you've announced this $1 billion buyback. What does that say about the international banking industry at this point, that you're using the capital to repurchase your own stock rather than building a war chest for acquisition?
Well, thankfully, we've got a very strong capital position. So our CET1 ratio, the ratio that is the indication of our aggregate capital, is 14.2%, which is extremely strong. So even after the buyback, we'll still be in the top half of the range that we indicate. So we've got a very strong capital position, super strong balance sheet, as evidenced by the fact that we just don't have material loan impairments, and an extremely liquid balance sheet, as we typically do, but we're at the top end of our range. So for all those reasons, we're protected against whatever pullback or surprise may come, but we are investing fully in the business. So, $1 billion buyback, but we're investing, well over $2 billion of cash into our business year after year after year and growing. So first and foremost, we invest in growth.
Yeah.
We take the surplus and return it to shareholders.